I was looking around the internet the other day and I ran into this video talking about debasement. And then I was looking elsewhere and I kept running into the word debasement on CNBC, on CBS. I mean, everywhere I turned, here was a headline about debasement. And I thought, my goodness, all of a sudden it's trending. Well, I have to admit, Cern Basher, that when you have mentioned it a couple times on the channel, I wasn't quite getting it because it's a little bit confusing if you've been paying attention to the rest of that whole world of inflation and issues with the value of currencies and whatnot. And it's just I couldn't get it. I just wasn't. But that little video helped me a lot, and I thought, okay, we need to get CERN back on because this debasement thing is trending, and it's important, I think, for those in the audience to get it, to understand it. Yeah.
Yeah, I think you're right, Randy. Although I fear that once people get it, there will be riots in the streets.
Oh, I see. You mean more riots in the streets?
More riots in the streets.
Yeah.
Yeah.
We certainly don't want to tell anybody in Europe that there are about debasement.
Well, they ought to know too.
Yeah, because I mean, the riots in the streets in Europe, they just seem to riot kind of as a like it's Tuesday.
Yeah, I mean, it can be a fun activity for some,
That's right. Especially if you don't have a job and you know,
especially if you're paid to riot. That's even more fun.
it's a riot for sure. All right. Well, then inform us. It's a lunch.
Yeah. Well, this should be fun.
Okay.
So you asked me to take a look at this and come back to you with a little bit of a presentation. And so here we are.
Mhm.
This will be a fun thing to discuss on a Sunday. We're going to talk about money, wealth, and debasement.
Okay.
All right. So you turned me on to this article from CNBC, why Wall Street's old wall of worry and new debasement trade are boosting gold, Bitcoin, and typically volatile October.
Okay.
I love headlines. So like this is real art, right? To get as much in a headline as you can.
Yeah, right.
Yeah. All right. So let's dig into this, dive into it, get into the debasement. All right. First of all, money, Randy. What's money? Money
System
is,
value.
there you go. You can read. A system of value that facilitates the exchange of goods in an economy. If
Right.
we didn't have money, we'd have to barter back and forth. Bartering is horribly inefficient, particularly if there's more than like two or three people.
Right.
Barter isn't bad if there's two people, but get beyond that, it gets complicated really fast.
I don't know if they're still around. There were some barter exchanges for a while. Back, I don't know, 30, 40 years ago, I tried to kind of get involved in that, like even between businesses where, famously I was in the bicycle water bottle business. Maybe somebody would trade me. You put your water bottles into the system, but guess what? They ended up having money because they would give you points. It was
Yeah.
just another way of doing money.
Yeah. Points, same thing. Yeah. And so there's an important distinction here between money and currency,
Right.
right? So currency is typically something that's issued by a government or some kind of central authority. Okay. It's a subset of money, right? And currencies, the important thing to understand is they lose value over time, and we'll talk about why in a minute, right? But money is a much broader concept.
Okay.
Money could be in points, right? Airline miles could
Right.
be points in your example. It could be other types of money. It could also be digital money,
Yeah, in fact,
right?
I think you or somebody else suggested I read this book on money, and in the very first chapters, it gives examples of shells and rocks.
Yes.
One of the more fun examples was of an island that was using rocks, and the rocks were only available on another island, and so you had to actually go to the other island and get these rocks. And eventually, they started bringing back boulders and then bigger boulders. It was an interesting it was an interesting story.
Yeah, it's the island of Yap, and the stones were not available on Yap. They had to go to Palau to get the stones. Quite a perilous journey. A few sailors and stones were lost on the return journey.
Hmm.
But yeah, no, really interesting. That was also the first sort of form of a public ledger,
Ah,
which in the Bitcoin world is what we have there too. So not everything with Bitcoin is new. It was taken, from ancient times.
I was wondering though, is that where the saying about that guy really has stones came from?
Could be, could be. Yeah, we'll never know. We have to, we can't go back and ask. Yeah. Okay, so money and currency. There's a clear difference between the two. Um, in terms of currency, right, it loses value over time. So here's an example with the US dollar. Since the US went off the gold standard, our currency has lost 87% of its purchasing power.
Only 87.
Only 87%. So if you held US dollars in August of 1971, today those purchasing power of that is down 87%.
So now how does that compare, CERN, to kind of a formula that I've used in my head over the years? Actually, the formula needs to change now, but I used to use like a multiple of 10 from when I was a kid. So, if a Pepsi was 5 cents then, it's 50 cents now. If a house was $10,000 now, it's $100,000. I mean, then it's $100,000 now. So, this number of 10x would suggest that we did have a 90% reduction in the value of the currency. So this is similar.
Yeah,
So is that kind
very
of
similar. That's right. And if we extend it out over a longer period of time, this is since like 1914 or something like that, 1912 maybe, we're down about 97% in terms of purchasing power.
right?
Now, the government likes to couch this in terms of inflation.
Hmm.
And the beautiful thing about inflation is while the cost of stuff at the grocery store goes up, the value of your home also goes up. So you actually think you're gaining wealth when you're really not,
You,
right?
you may or may not be if the asset is going up faster than inflation.
Right. If you're fortunate enough to be in assets that are appreciating faster than the cost of goods and services, then you're not so unhappy about it. Right. But once you realize that inflation really is impacting everything, including the cost of a home, and certainly for people that don't own a home, that inflationary increase in home prices is not helping them.
Right. So that becomes one of the huge advantages of home ownership is that you manage your your inflation to the extent that you stay a homeowner.
That's right. Yeah, you kind of insulate yourself to that risk of the rising cost of shelter, I guess.
Huh? Yeah.
Okay. So we talked about money. There's a distinction between money and wealth, right? So wealth is the value of all the assets of worth, okay? Assets of worth, we'll get into that in a second, owned by a person, community, company, or country.
Okay.
Okay, so money itself, the US dollar itself is not wealth.
Mhm.
This is a representation. It's a medium of exchange, right? So again, a distinction between that and money. So let's talk about our next topic, the bears.
Okay.
Oh, wait, sorry, debasement.
What?
I had to throw that in there.
I see.
Debasement, the bears sound so similar to me. I just
I
couldn't
know, and
resist.
every time you say the word debasement, I'm back in St. Louis, wondering which is the northeast corner so that I can get into it during the tornado warning. So,
There you go. Yeah, shout out to our Bears fans out there. Um, all right, so let's talk about debasement. We've got our daily vocabulary booster going for us here, Randy.
all right.
So debasement simply means a reduction in the quality or value of something.
Okay.
If you're debasing something, it's lower quality. So think about over time, perhaps the quality of toys have been debased because now we have cheap stuff from China,
Right.
or the value of something else. It's less valuable because let's say the content of a certain metal is less than it used to be.
Mhm, mhm.
Okay. So I think that's pretty clear. All right. We have other words for debasement, synonyms, corruption, humiliation, perversion, etc.
Mhm, mhm, mhm.
Okay, so you can think about it in those terms,
You
thanks
can,
to our
you can, you can,
vocabulary pigeons here.
you can debase, you can have the act of debasing something. You can
Yeah,
debase a person by the way you speak about them.
you could. That's right. And that's where I guess humiliation comes in,
Right.
et cetera. Yep. All right. There was an article here. This is from over a year ago. Currency debasement, economic savior, or silent thief. So I'm just going to go over a couple things from this article because I think it's nicely put. So again, most people think of wealth as money,
Mhm.
but in reality, what he calls genuine wealth is all the things that money can acquire. Okay. And that's an important distinction. So the example here is you and 10 of your friends are put on a deserted and isolated island, and you are given $1 billion. Are you wealthy? Well, your money can't purchase anything in this situation, right? You either build infrastructure on the island or to develop a means to communicate with the civilized world. And if you don't, your money possesses zero value.
Right.
So that's a very clear example of money is not wealth.
Hmm. Hmm.
Okay. And of course, most of us hopefully won't be stuck on a deserted island, but I think the point still stands.
So on the other hand, money and cash and cash equivalents, as we call it, cash and cash equivalents are still considered to be part of your assets. Um, uh, but the cash itself, or the pieces of paper that represent the stock you have in a corporation, are are not the actual wealth. It's what they can be turned into.
They're all representations of wealth.
Yep.
That's right. Yeah, that's a good point. And again, just to drill this home, money itself is seen primarily as a medium of exchange.
Mhm.
Okay. Now, we also use money as a store of value, but currency is a terrible store of value because of the inflation, the loss of purchasing power over time that we see with currencies. Okay, and the debasement which comes, and we'll get into that a little bit deeper in a minute here. But money is a good medium of exchange. There are lots of forms of wealth that you would not consider to be a medium of exchange, but are forms of money,
Mhm.
right? So, for example, shares in like stock in a company,
Mhm. Mhm.
right?
Or
And
or even something like silver bars.
yes, that's right. Yeah. Okay. So again, the wealth of an individual or a society is therefore not measured by the amount of money held, but by the abundance and quality of consumable goods and services available that enhance life and well-being. This is kind of more on an individual basis, but um, the important thing here to get across, I think, is that wealth is driven by the productive capabilities of a society, and of course, the role of entrepreneurship in that in creating that real wealth.
Mhm. Mhm.
Right. And this author of this article makes the point that this distinction is crucial to comprehend because the most powerful position in today's modern society is whoever controls the printing press where the money is created.
Mhm.
As long as the state is in control of money, we tend to believe that the state is the source of all value creation.
Mm.
Right. Um, so that's important just to kind of think about.
Yeah. I mean, I couldn't agree more that I think that people who manufacture bicycle water bottles are the source of all wealth. Yeah.
A portion of wealth, Randy, yes. When I'm riding my bike, I really appreciate the fact that those water bottles exist.
Yes. So if we took it to a slightly different level, okay, a 1000x level, we'd be looking at Elon Musk creating massive amounts of wealth, and individuals who are critical
Yep.
of his actual stated net worth are not taking into consideration the amount of wealth that he's created for the world or for individuals in the world.
Right. And here's, I think, a really good example to your point, and using Elon as an example
Mhm.
of the wealth that's being created by the efforts of companies to drive down the cost of putting materials in space.
Mhm.
So this is an example. I don't know how old this is, but it compares the launch cost of different rockets,
Mhm.
right? And you can see here the launch cost per satellite here with these what shows Amazon, I guess Blue Origin,
Mhm.
in the millions. And then OneWeb, as low as 970,000. And then with SpaceX, Starlink, down to 25,000 with Starship, I guess, here.
Right, right. And
But
going down.
and going down. And this chart perhaps shows a little bit better that we were on this trajectory in terms of lowering costs in space, and it's kind of a linear, slowly, slow descending line. And SpaceX now has taken us on this much more rapid descent in terms of the cost of putting things in space.
Right.
Right. So this right here, this act of doing this is creating wealth. It's creating value for society. And it's certainly creating wealth for Elon's, creating wealth for SpaceX shareholders, and it's creating wealth for all of humanity, frankly.
So we used to send the worst criminals to New Zealand. It might be getting, and Australia, it might be getting inexpensive enough to send the worst criminals into space.
Yes, although I'm forced to make an important correction there, Randy.
Yeah, yeah.
New Zealand was never used as a prison.
I threw it in for fun. I actually, knew that.
Everybody that went there by choice. Not true with Australia.
Or Georgia.
There you go.
That's right. Yeah.
Yep. There's certain things I just can't, I can't let stand. All right. So the state is not a creator of wealth, right? And debasement can be viewed as a form of economic manipulation used by states, countries to decrease the intrinsic value of the money held by the public.
Okay.
Okay. All right. So
now manipulation sounds harsh. So
well,
manipulation sounds extremely intentional.
it's intentional.
And it seems to me that it's not always really intentional. It's more like, oh, I think I can get reelected if I do X. I don't care what happens to the
Well,
inflation.
that's intentional. That's manipulation.
Okay.
Yeah.
Might be gross,
So
gross negligence.
yeah. So if we go back to the Roman Empire, right? So Nero, for example, reduced the silver content in their coin,
Hmm.
right? So it used to be real silver coins, and they ended up debasing those coins by reducing the amount of silver in the coins.
Mhm.
Okay, so very effective way of sort of trying to get more for the money, but making the currency worth less.
Right. Mhm.
All right. So people would shave off small amounts of metal from the edges of coins, right? And collect the shavings to melt down, right? And produce counterfeit coins, right? So all kinds of challenges in history with that. And then this to an earlier point, most people see the value of a house rising. They do not see the value of currency decreasing, which is what's causing the price to rise.
Mhm.
Okay. A house is still a house. Now, certainly houses that are made today are different than the houses that were made, 100 years ago. There's differences and maybe they're of greater value today. But still, the massive appreciation that we've seen in home prices isn't because of that the house is that much better,
Right.
right? So for asset owners, they maintain the illusion that they're getting wealthier. But the house's increase in value is a product of more currency being required to reduce because of more currency is being required to purchase the same asset.
Mhm. Mhm.
Okay. All right. All right. So let's see here. Here's some other examples of the physical debasement of coinage, of coins. Right. So you could shave metal from the edges of coins to recover some of their gold or silver. We just talked about that. You can plug them. You can remove precious metal from a coin, and you can punch it out of the middle. And then the faces of the coin were hammered to close the hole.
Hmm.
Right. And then you could add other lesser valuable metals, make an alloy. Um, and then the other thing with the advent of paper money is you just print tons of them.
Mhm.
The paper money's not worth anything anyway, unlike coins were. But at least with paper money, you relied on the state to print the appropriate amount. But there are all kinds of examples in history of countries abusing that privilege. And one of the more recent ones is Zimbabwe. I actually have one of these $100 trillion notes.
Mhm. Mhm.
And as I mentioned here, that the peak of that, it could scarcely buy a loaf of bread. I recall that it could buy about 3 eggs with a 100 trillion
Hmm.
note.
Mhm.
In the Weimar Republic in Germany, workers were paid daily and the currency was used for fuel or wallpaper, right? I would imagine they probably used it for toilet paper too. It probably came in handy for that,
Potential. Yeah. Yeah.
right? So again, there's all kinds of examples throughout history of governments abusing the privilege of, controlling the currency and just printing way too much.
Mhm.
Now, the US during the Civil War issued greenbacks for the first time, and it was a fiat currency not backed by gold or silver.
Mhm.
Inflation followed, but post-war reforms, including the return to the gold standard, helped to restore credibility.
Mhm.
So countries have come back from the brink, although it's few and far between.
Right.
Okay. All right. Bringing us up to more modern times. The way that countries do it now is, again, still printing currency. But the United States, we've evolved to a more fancy way of doing it, and that's called quantitative easing,
Mm.
right? And so this is pretty fancy, but it's really the same process. Quantitative easing happens when central banks make large-scale asset purchases, i.e., they buy bonds.
Mhm. Or
And when they
mortgage,
buy, sorry,
or mortgages, right?
yeah, any debt instrument, yeah. So they basically buy bonds from banks, and that creates reserves on their balance sheet that gives banks access to more cash. Because we have a fractional reserve banking system, if you put assets on the bank's balance sheets, they can create more out
Right.
of thin air.
Right.
So again, same impact. Okay. All right. And then of course there's the risk to quantitative easing. If you do too much of it, you get a whole bunch of inflation, just like if you printed too much currency.
Mhm.
And then some also say that the quantitative easing contributes to wealth inequality. If you're the owner of the assets, you benefit maybe more than people who don't own assets as much. But there's a little bit of balance here. Some also argue that the increased spending resulted from QE leads to more jobs and better wages for the lower and middle classes. Yes, perhaps that's a bit of an offset, but probably not fully offsetting the asset price increase.
Yeah. Yeah, I think we really saw this during the last 4 years of the Biden administration, or the whole 4 years of the Biden administration, where there was an absolute division that Larry Goldberg and I have been talking about for 2 years now, where it was clear that those who were earning over $100,000 a year and who owned assets were doing great. And people that earned less than $100,000 a year and owned no assets were
Yeah.
doing horrible. And it was like two economies.
Yeah, it was sort of example, if you were a renter, then you just suffered the price increases, right? If you owned a home or owned an apartment, then at least you kind of made some of that back.
Mhm. Mhm.
So yeah, it's definitely an issue.
As well as your mortgage didn't go up.
Right.
You still were paying the same monthly amount.
Yeah. Now you might have had inflation and insurance and things like that. So there were some hits there too, but yeah. All right. So this goes back then to the CNBC article. So they're saying that gold and Bitcoin surged to record highs as investors hedge against inflation, rising US debt, and a softening dollar. And then what's being called the debasement trade has accelerated with investors turning to hard assets like precious metals, like gold and silver, and crypto as alternatives.
Mhm.
Okay. And of course, pointing to the fact that October tends to be a volatile month. And then, of course, we had last week, the falling out apparently between the Trump administration and China
Right.
and the threat of more tariffs and so on. So that's never comforting for investors.
Right.
So that's kind of in essence of the debasement trade in terms of investing then in more hard assets, something that can't be debased perhaps as quickly as the US dollar can be.
Right. Okay.
And
So
so investors are kind of fleeing that risk and purchasing more gold as well as Bitcoin
right. And it's silver, interestingly,
and
is
silver.
the standout this year.
Yeah. Yep. So here's a visual of the money supply in the US. This is M2 money supply.
Mhm.
And when you see this chart, it looks absolutely crazy. The problem with this is, it's not a log scale,
Right.
right? The percentage increase from, 4,000 or 4 trillion to 8 trillion is is not the same as 4 to 12, which is the same distance on the chart. You
Right.
have to go from 8 to 16 to
Hmm.
have the same percentage impact. So this chart at least kind of smooths that out. It creates a log scale here on the left side.
Hmm.
It makes it a bit more like a smoother line. And there were times when the money printing and the money supply kind of flattened out a bit.
Hmm.
But we had this during the pandemic period where it went straight up, even on a log scale.
Hmm.
And in recent years, we've had a little bit of a dip, but the resumption has resumed here in terms of money supply going up.
Right.
And it's still above probably what you would call that long-term trend,
Hmm.
or at the very least,
Equal to.
perhaps on track,
Yeah.
depending on how you draw the line. I'm moving this cursor probably not appropriately there, but okay. So and here's the growth rate, year-over-year growth rate in M2. And so you can see over time, it's generally bounced around between 0 and about, 13 or so at the peak.
Hmm.
And then, of course, the pandemic, you know, changed everything, and we had over 25% M2 growth for a while. And then we had a little bit of a recovery in that. We had some negative growth, but we're back up to about 5%.
So we're pretty much in the flat middle of the norm.
Yeah, I think the average of all this is about 7% a year.
Okay.
So if you think about inflation, consumer inflation, if you think about 3% for consumer inflation, monetary debasement's been about 7,
Mm.
right? So again, the government has conditioned all of us to think about inflation as the biggest risk. But in reality, if you hold US dollars, debasement is also something that's eroding the value of the dollar faster than inflation is.
Okay, so this is where you got me confused again.
Yep.
This is where I lost it last time. So what is happening? What's the other part of the formula that we have to see to be able to add in uh, to get to greater loss than the what we're seeing in inflation?
Okay, let's talk about it in terms of a company.
Uh-huh.
Let's say this chart represents the number of shares outstanding of the Randy Kirk water bottle company.
Mhm, mhm.
Okay, the best company on the planet producing the most profits. But Randy, in order to keep his employees happy, has to keep issuing shares. And also, Randy likes to compensate himself in shares. So the share count has gone up over time. So you're diluting the existing shareholders.
Mhm, mhm.
Okay. Shareholder dilution isn't so great. Let's say your earnings were growing at 7% a year and you were issuing 10% more shares a year.
Mhm,
As an existing shareholder, I'm not really benefiting from a 7% growth rate if you're diluting my shares at 10% a year,
mhm, mhm,
right? My ownership in your company, my share of the pie of your company is slowly going down.
mhm, mhm.
Okay. So if we think about this now as a country, M2 represents kind of shares in our country's economic pie,
Okay.
right? The amount of money relative to GDP.
Mhm, mhm,
And if this is going up, then as an individual in the country, my dollars per GDP is being diluted.
mhm.
Does that make sense, Randy, in terms of those two examples?
Yeah, so we know that the amount of debt that the US has and the amount of deficit that the US is continuing to have are both way above norms, and way above productivity. So the fact that the deficit is above productivity is why the debt is actually rising. Is
Yeah.
that is that right?
Yes.
Okay. So so is debasement in this case in deference to inflation, the losses that we're taking kind of as a country altogether. So it may not show up in our grocery bill or in our rent
Right.
but it shows up in our overall future as our ownership. So the country becomes less and less um, valuable, I guess, in terms of our share in it? Is that is that the?
Correct. Yeah, no, you're exactly right. You're being diluted out of your share of GDP.
Okay.
Right. Now, let's imagine for a second that you and I had a printing press
Mhm.
and we could just print US dollars. What would you actually use those dollars for? Well, some of it might go to groceries,
Mhm.
push up those prices. Some of it might go to education,
Mhm.
although perhaps not, right? That might be for younger people, they would spend on education. So not every dollar that's printed goes to the same things.
Mhm.
You and I actually might use more of that to invest, to actually buy stocks, right? So consumer price inflation is only capturing a part of what's happening to all this extra money,
Mhm. Mhm.
right? But all the extra money has to go somewhere. So it shows up in housing prices, it shows up in higher stock prices, shows up in gold prices, shows up in Bitcoin, it shows up in all these assets inflating, in addition to CPI.
Okay, but all of those things that we're talking about are human decisions attempting to protect themselves or are so fear and greed. They're either trying to make a lot of money or they're trying to protect themselves from losing money. So, and those are very human decisions. My thought was, as I'm trying to get this figured out, is that uh, Jordan Peterson makes the great case that I had never, even though I studied psychology in college, he made the great point that I had really missed that humans should be thinking about their future self. You shouldn't just be thinking about your today self. You need to be thinking about what are you doing today that is going to increase your joy, your quality of life, your assets, whatever, 5 years from now, 10 years from now. And what I feel like this is saying is the United States should be looking 5 or 10 years ahead and not ruining the future. They should be trying to make that future better. And that this debasement element is really ruining the future by another 2, 3, 4%, whatever, over and above the inflation hurting today.
Hmm.
The debasement element that we're talking about is hurting the future.
Yeah, I mean, you could certainly say that with a growing debt level, that's the
Right.
case,
Right.
right? We're putting a burden on future generations more so than, than today's.
Mhm.
So in that aspect, that's true. Um, the debasement really, I mean, because so much money is being created, it's diluting your share of our country's GDP, basically, is the way I think about it. Again, if you think about a company, right? If a company issues too much stock, as a shareholder, you're getting diluted. You're getting less earnings per share, right? Per share that you own. At the country level, the more money that's in the system that's being created out of thin air,
Mhm.
it's diluting your share of the country's GDP.
Right, right. But what I'm trying to look at more is the trajectory. So,
Okay.
so it wouldn't just be in terms of you mentioned just one element, which I think would be the debt. That is definitely a drag on future generations.
Yeah.
We've seen the other drags on future generations. I've been making a big deal on X the last few days. You know, that yes, if a 25-year-old or a 30-year-old wants a house bad enough, there are $100,000 houses in the country. There's $200,000 homes in the country. There's condos. You know, there's ways to get into a $100,000 home, which pretty much anybody earning a wage can afford. At the same time, if that $100,000 home takes 40% of your income instead of 30, and that is, on the rise,
Hmm.
then that might be due to this money supply problem. And therefore, it's debasing your future ability to earn or to accumulate.
Correct. Yes, absolutely.
Okay.
Yeah. So what people need to do to try to escape this is find assets that are growing faster than the debasement rate.
Not just faster than inflation, but actually faster than debasement. Yeah.
That's right. Inflation is the first hurdle. That's your hurdle for as far as consumer spending, so that your cost as a consumer, you're maintaining your ability to afford things.
Mhm, mhm.
But yes, you're right. This is even greater. This is a higher number, probably closer to 7 or 8% per year. in terms of your ability then to afford a house, your ability to afford, investments, right? So what investors have historically done, and one of the great long-term investments is gold, right? And I think I've shared this little cartoon before. All right, this guy's pretty happy with himself. His dog is a gold investor,
Right.
and the dog seems to enjoy martinis, which I suppose dogs would if they invested in gold over the last few years. So gold, is something that's been around a long time. And this is kind of an interesting chart. Almost every country in the world produces gold or tries to.
Hmm.
And over time, there have been major gold producers and some have ebbed and flowed. In recent years, the rest of the world here has really picked up a lot of share. We're producing gold now in a lot of places.
Wow.
I think a lot of people probably think that, South Africa, US, Australia, probably the big markets, but that's really changed.
Hmm.
Okay. Um, and it's interesting that, gold mining goes back, to ancient civilizations. And this, according to this source, best estimates indicate that around 216,000 tons of gold have been mined throughout history. And about two-thirds of this gold has been extracted since 1950.
Hmm.
The massive increase in production has been due to advancements in mining technology and the discovery of new gold deposits. And I just think, again, going forward, as we have eventually a declining cost of energy, it'll make mining gold more affordable. As we have maybe new technologies to mine deeper and in different places, again, that helps. And then, of course, with our previous discussion about SpaceX making activity in space that much cheaper, eventually mining asteroids where there's apparently so much gold, it's ridiculous, becomes economical.
Yeah.
But for now, it's pretty rare here on Earth. And apparently, all the gold ever mined would fit into a cube 22 meters on each side, 22 meters wide. That's about 73 feet across,
Uh,
right? About 45% of that's jewelry. About 22% is bars and coins. Central banks own about 17%. And then other, I'm not sure what that is, but other 15%, and so on. And then the gold reserves, identified reserves, I guess they haven't been mined yet. Another big chunk.
mhm.
And then resources, I guess. I'm not sure if they're quite recoverable, but maybe there's gold resources that are not considered reserves yet because perhaps they're not economically viable yet. So there's another chunk here that's been identified.
And I asked Grok the other day, who's buying the gold right now? And Grok said that roughly speaking, it's about 65% central banks and about 35% consumers for either jewelry or for uh, storing, holding on to.
Yeah, this is from June of this year, so perhaps it's a little bit dated now, but they're showing central banks here, to be fairly minor players, although in recent years, a significant uptick.
Mhm.
And they're showing investments, I guess individual investors, the biggest part, and then jewelry, pretty, a smaller part, but fairly large still.
Yeah. Well, China, Poland, and Turkey are the three big buyers right now, and it's ridiculously more than any other country. I mean, they're
Yeah.
China is by far the most, and then the other two, and then after that, it drops off significantly in terms of who's buying right now.
Yeah, and it's interesting because the U.S. government, apparently owns gold, but I always thought of Fort Knox, Randy, as being this pretty big place. I don't know about you, but this building looks a little smaller than I expected. Um, Somewhere in Kentucky, all the gold that the U.S. owns is in this building. I wonder. Yeah.
Yeah, yeah.
In terms of demand, or sorry, in terms of supply, mine production is the largest part, the purple part of this chart. And then recycled gold is a significant chunk as well.
Mhm.
Okay. And then in terms of countries that are producing gold, this is in 2024. We had about 3,661 tons produced. China being the largest of that, then Russia, and then Australia, and Canada, and then the US, Mexico, Peru. are at the top of that list. So lots of countries around the world mine some gold.
Mhm.
This is a nice little cartoon of gold taking him to the sun or to the moon, I guess. Gold prices this year. This is the beginning of the year. It's gone from about 2,500 per ounce up to 4,000.
Mhm.
And if we go back a little longer, this is going back to, I think, 1988, a little bit longer term chart when gold back then was around, 400-ish an ounce. Um, so
Yeah.
that's done well. And then here is the annual returns of gold.
Mm.
This year is the second best return so far of gold on a calendar basis since 1971. I'm sorry, that's not correct. 1974 was a good year, so was 73. It looks like we're in the top four,
Mhm. Mhm.
but the best year since 1979 anyway.
Yeah.
It's funny when you go off the gold standard, what that does for gold prices, I guess. Huh?
Kidding.
Okay. And then I just put this chart together, gold versus Bitcoin. Now, it's a little unfair because Bitcoin in the early days was, a tiny asset not worth anything. You're
Mhm.
going to get huge percentage increases. But if we work backwards on this chart, gold's up 52% so far this year, Bitcoin's up 21. Last year, gold was up 26, Bitcoin was up 121%. 13% year before for gold, 155 for Bitcoin. Bitcoin was previous year was down a lot. And the year before that, gold was down some.
Mhm. Mhm.
Um, anyway, they, different return profiles, but both have been pretty strong in recent years. Okay.
Yep.
If you think about, where does the value of gold come from, right? Now, certainly people value it for jewelry purposes, and there's also some industrial uses,
Mhm.
but it's valued because it's scarce.
It's valued because it's valued.
It's valued because it's valued, but it's valued because it costs money to mine
Right.
it,
Right.
right? There's an effort, like we talked about the island of Palau. They had to row their boats, a couple hundred miles from Yap to Palau, right? There
Mhm.
was an effort to get those stones. They had to mine them, carry them back.
Right.
Same thing is kind of going on here worldwide, right? There's a real effort to mine the stuff that we value.
Mhm.
Um, it stands the test of time. Basically, all the gold we've ever mined is still in existence today. It's a good store value. It just kind of sits there and does nothing.
Mhm.
The problem with gold is that you can't easily spend it. If you have a lot of it now, you've got a security problem, right? There's all kinds of issues with it, but it's really stood the test of time where there's very little else that humans have come across that stands the test of time.
Mhm.
Even the best companies don't last forever,
Right.
right? So gold has been a good store of value for, centuries essentially.
Right.
Now, this I thought was interesting.
Mhm.
Buckminster Fuller said this about Bitcoin in 1967. Wealth isn't gold, it's energy, right? You have to put a lot of energy into mine gold.
Mhm.
By the year 2000, there'll be a scientific accounting system for wealth aligned with the laws of physics. So little did he know, but he was talking about Bitcoin.
Yeah, right. I'm sure that it could be easily figured out. Maybe even in 1987, it could have been figured 67, but
Yeah,
certainly today we could figure out almost exactly how much energy is required to mine an ounce of gold.
that's right. And like gold, there's a certain amount of energy and cost to mining Bitcoin.
Mhm.
Now, this is a really busy chart that shows all these countries in the world where Bitcoin's mined. The cheapest one was Venezuela at about $250 per Bitcoin. This is back in 2022, I believe. And the most expensive one, I think, was somewhere it was 246,000.
$246,000.
Yeah. And
Wow.
Bitcoin wasn't at that price back then. And I'm sorry, it's not jumping off the page, but the United States at this time was $21,000 per Bitcoin to mine it.
Mine it right now. Okay.
2022.
Oh, in 2022. Okay.
So a little bit old data. Okay. Um, and if we go to more recent times, this is 2024. Okay. Now in the United States, you're looking at about $107,000
Oh, to mine it.
to mine it. And you can see the disparity around the world. In Syria, it costs you about $4,000 per Bitcoin.
Oh,
I think in Iran, it's pretty low. And that number here is just over $1,300. So significant difference in different places around the world.
hmm.
Okay. One of the most expensive places would be Switzerland, Belgium, Germany. They're over 250,000. And then here's the top 10 least profitable countries for mining Bitcoin. This is assuming sort of average electricity prices.
Hmm.
So Ireland, Belgium, Bahamas, UK, Germany, etc., over 200,000. So that's greater than the cost of Bitcoin today.
Right.
So if you were to mine Bitcoin in those countries, you have to find an energy source that would drive this cost down to
Yeah.
more reasonable levels.
Yeah.
Right. And that's the challenge. Same thing with gold miners. If you're going
Yes.
to mine gold in Germany, you're going to have to find a way to do it cost effectively.
Same thing with information mining, which I think we've got a book coming out or something.
That's right. Yep. Good point, Randy. Right. So these things are all pretty similar. Here's the 10 most profitable countries for Bitcoin mining. Iran, $1,300. Ethiopia, just under 2,000. Right. So the cost of energy in these places is pretty low. Now the question is, the other infrastructure that you need and so on, is that feasible in these places? It may or may not be. And the other interesting thing to think about too is this has been one criticism of Bitcoin over the years, is that it costs so much to mine it.
In terms of
Right.
energy.
In terms of energy.
It's using
Yeah,
energy that might be used for something else. Yeah.
that's right. Right. So here's some examples. This is in 2024. The electricity used to mine a single Bitcoin in 2024 could power 61 US homes for a year.
Hmm.
So people look at this and say, this is crazy. Why would you waste it on Bitcoin?
Hmm.
Let's create some other token that doesn't cost as much, and we'll call it Ethereum, and it's so much cheaper, right? But the problem is this is actually what gives Bitcoin its value, right? Just like gold is scarce and difficult to mine and costly, giving it its value and underpinning gold's value, the same process here is happening with Bitcoin.
Right.
Okay. This is also to do with security, because in order to create Bitcoin, you have to pay the money to mine it. It makes Bitcoin very, very secure. And by the way, the energy cost, you could make a Tesla Model 3 circle the Earth more than 86 times, right? So for the people that see the value in gold, again, Bitcoin is very similar in terms of the mechanism that gives it its underlying value.
Right.
And for the people that say there's no intrinsic value in Bitcoin, well, there is. Here it is. It's the cost to create it.
Right.
Okay. And then here's the Bitcoin chart so far this year. We recently had a new high and it promptly fell back down.
Hmm.
So we've got a little bit of volatility. And here is Bitcoin's price since inception, essentially. It's been the best performing asset class anybody's ever seen. But again, starting from nothing, basically.
Yeah.
Even a company that IPOs typically is starting from, probably a multi-billion-dollar valuation.
Right.
Right. Bitcoin started essentially from zero. Here we are in terms of the assets, the ranking table. Gold now is a $27 trillion asset, followed by NVIDIA, 4.5 trillion, Microsoft at 3.8 trillion, Apple at 3.6 trillion, Google, Alphabet at 2.9 trillion, silver now is 2.7 trillion. Amazon 2.3, and Bitcoin is just worth a little bit less than Amazon is. And we got Meta, Saudi Aramco, Broadcom, TSMC, and Tesla in the 13th position at 1.37 trillion.
Mhm.
So two of these are metals. And then one is a digital asset, Bitcoin, and all the rest are companies.
Mhm.
So all different forms of money.
Sure.
And then last but not least, Randy, is this chart, which we like to review periodically. This is as of 10/10,
Hmm.
so up to date. You can see here gold's return since 2011 is 166% or annualized 6.9%. So this 52% gain is exceptional for gold relative to its annualized number,
Right.
right? International stocks are next on the year-to-date list, up 24%, and they've annualized about 6.3%.
Mm.
And again, if we're using a hurdle rate of about 7% for debasement, both of these are kind of missing the mark or roughly keeping up.
Mhm.
Okay. Bitcoin's up 21% year to date, 138% return since 2011. Again, some of these early year numbers are insane. But even so, if you took those off, there's some pretty strong results since then.
Right.
Emerging market stocks having a strong year, up 20%. They've averaged only 3.4% over this time period. Convertible bonds next on the list, and then the Nasdaq 100 up about 16% year to date, and about 18.6% compounded since 2011.
Mm.
So that's certainly been a good place to hide over the longer term,
Right.
and that's really the second best long-term asset,
Mm.
at least looking at these years since versus Bitcoin, and then Nasdaq, and then U.S. growth companies.
Yeah.
So again, if we think about the mechanism for creating value, right, that's where it's been, is in the Nasdaq and the growth companies in the S&P 500.
Right. Right.
Anything else jump off the page on this chart for you, Randy?
I didn't. Do you have Tesla on there?
Tesla is not on this list.
Because they
Yeah.
weren't they weren't in business and in the
No, they were since
oh,
2010, the IPO.
okay.
Yeah, we've reviewed that before. Tesla has compounded, I think, at something like 45% since its IPO.
Right. Okay.
So, relative to this, it would be the second best on here. Of course, there are some individual stocks in the Nasdaq, like Nvidia,
Right.
that's compounded faster than Tesla since that time period.
Right.
But Tesla would be one of the top compounders over this period of time.
And some of us think that over the next, I don't know, 9 months, it might be the best compounder.
Yeah, I don't know if I would hazard a guess about 9 months, but I would say the next decade or two. I'm pretty confident that Tesla has the potential to be one of the best compounders. Even though it's already $1 trillion asset, I think it could continue to compound at high rates.
Mhm.
Not investment advice.
Not investment advice. Well, you already had the disclaimer.
That's right.
You have to keep saying it over and over again.
It's never a bad thing. I'm sure it annoys everybody out there, but you just can't say it enough sometimes.
Well, okay. I think this helped. I hope it helped other people as well, because the word is popping up all the time now, so that we can understand debasement versus inflation, which is a different thing, and just kind of like thinking logarithmically, it's a little harder to think in terms of debasement.
Mm.
Just like it's a little harder, again, I think the analogy I made earlier of thinking about your personal self 5 or 10 years in the future. What am I doing now that's going to hurt or help me downstream? It might feel good today, or it might even feel bad today. It might feel extremely difficult. But will that difficulty turn into something valuable later? Will the good thing I'm doing now turn into something really miserable 5 or 10 years from now? So I think this would be very much true in terms of valuing assets for appreciation.
Yeah, I think my parting thought, Randy, would be that instead of thinking inflation as your hurdle rate,
Mhm.
in order to earn a quote unquote real return, a return that's higher than inflation,
Mhm.
I think people would be better served if they thought their hurdle rate was, 7 to 8%.
Right.
If you're really looking to protect the purchasing power of your money long term, against not only consumer goods and services, but just everything else, you need to beat that 7 to 8% return. And so if you look at this chart, past performance is no guarantee of future results, but it's REITs, it's real estate,
Mhm.
right? And this is real estate with some leverage,
Mhm.
right? And it's stocks.
Mhm.
Certainly US stocks have compounded at that. International emerging markets haven't compounded at those rates over this time period,
Right.
but it's reasonable to assume that they could over, a longer time period. Gold seems to hold its own, right? So at least relative to debasement, gold might protect you. You may not get much ahead owning gold, right? Unless you can time these, the strong periods really well. But just looking at these longer term numbers, there's few assets that can really deliver returns above the debasement rate.
Right.
Right. There's a lot of assets that don't make the cut.
Don't come close. Yeah.
Yeah. Yeah.
All right. Well,
Do you feel debased?
I feel debased. I feel better informed. I feel like we accomplished what I hoped to accomplish today. Thank you very much. And I'm very curious to hear in the comments below whether you guys got it. Maybe you already had it. I mean, maybe this is like, yeah, Randy, what's wrong with you? Or maybe this really helped you to say, oh, now I see it. My eyes have been opened. And will this change anything in the way that you think about your finances going forward in the future? And maybe, if you like the way that Cern Basher talks about it and thinks about it, you might even, head over to Brilliant Ideas. And
Brilliant ideas. What's that?
brilliant. There's brilliant something. Oh, wait. It's help me out again here. I can never remember.
It's brilliant advice, Randy.
Advice. That's it. Brilliant advice. Yes. And so now, are you suing Bradford and Larry at all over their new company, which has Latinized your brilliant brand?
No, I think it's very clever of them, and I wish them well. Yeah, no, I think it's a great idea.
Yeah, okay. Anyway, okay, so brilliant ideas, guys. Brilliant ideas. I know I'm always messing up these brands. It's very sad.
You messed it up again. Brilliant advice, Randy.
Advice. What did I say?
Ideas.
Yes. Well, I claim sometimes to do it on purpose.
Yeah,
Because by doing this, it really solidifies it in people's head.
that's true.
I'm claiming that. I'm not sure that I could back it up if I was, really digging deep inside.
I would just go with that, Randy, if I was you. Just stick to that plan.
All right, Cern. Again, thank you so much for coming out on a Sunday and putting this together for everybody. And I'm really looking forward to the comments.
Thanks, Randy.
All right, and it's been great talking to you.